Imagine waking up on a Tuesday morning and realizing your net worth just hit a number so massive, it literally reshapes how we even understand wealth. Well, according to our source material today, that's exactly what happened on June 12th, 2026. In the very first second of trading for the SpaceX IPO on the NASDAQ, Elon Musk became the world's first trillionaire. We're talking about $1 trillion. That is a 1 followed by 12 zeros. It's a figure that surpasses the GDP of most nations on Earth. In fact, the source notes that if you were to combine the wealth of the founders of Google, Amazon, Oracle, and Facebook, it still completely falls short of this single milestone. But let's be real for a second. Our human brains just aren't wired to comprehend a trillion of anything. To help us grasp this incomprehensible scale, the source uses a brilliant time analogy. Think about it like this. If you count backward 1 million seconds, you'd go back just about 11 and a half days. Not too hard to wrap your head around, right? But if you try to count back 1 trillion seconds, you would be traveling back 31,000 years in time. We are talking about an era before human civilization even existed. It's an absolutely staggering comparison, and it really anchors just how massive this wealth is, before we even start unpacking where it came from.
Welcome to The Explainer. I am so thrilled you're joining us today because we have got a truly fascinating breakdown ahead of us. We're going to neutrally unpack a popular, highly detailed analysis that attempts to peel back the layers on this unprecedented accumulation of wealth. The creator of our source material argues that this trillion-dollar milestone isn't just a simple story of a wildly successful business. Instead, they claim it involves deep market psychology, highly specific tax strategies, and some heavily debated political maneuvering.
So, here is our roadmap for how the source breaks this all down. First, we'll look at the reality of paper wealth. Second, selling sci-fi dreams. Third, the buy, borrow, die strategy. Fourth, alleged political ties and valuations. And finally, the ultimate cost to society. Let's dive right in.
Section 1. The reality of paper wealth. Illiquid fortunes. Right out of the gate, the source makes a super critical distinction. This mind-boggling wealth, it isn't actually liquid cash. I mean, Musk doesn't just have $1 trillion sitting in a checking account somewhere ready to be spent. According to the analysis, Musk himself has stated he holds only about 0.1% of his net worth in actual cash. The rest of it, the whole shebang, is entirely tied up in his 38% stake in SpaceX and his 15 to 25% stake in Tesla. If he actually tried to withdraw this money by selling off massive amounts of shares, it would instantly flood the market. Investors would panic, assuming something was terribly wrong with the companies, and the valuation would crash. So, in essence, it's really just a number on a screen, completely dependent on the mood of the market.
Now, what's genuinely fascinating here is the massive discrepancy in how the company is actually valued. The source points out that while the market values SpaceX at $2.2 trillion, the research from Morningstar values the company's actual fundamentals at around $780 billion. That's roughly 35 to 40% of its trading price. And the creator stresses a rather surprising fact. In 2025 alone, SpaceX reportedly recorded a massive loss of $5 billion, with further billions lost early the next year. Which naturally begs the question the creator poses. If the company is losing billions of dollars, how on earth is it valued at trillions? To answer that, the explainer leans on theories from economist Burton Malkiel. There are basically two ways to look at it. First, you have the firm foundation theory, where a company's stock value is strictly tied to its actual profits and revenues. Pretty standard stuff. But then you have the castles in the air theory. This is where the value is based almost entirely on psychological hype and the grand dreams a company is selling. The source strongly argues that Musk's companies are trading as castles in the air. A Harvard Business School professor cited in the source material even goes so far as to call it a financial cult, where people are investing in the aura and the myth of the founder, rather than the actual tangible product output.
Section 2. Selling sci-fi dreams.
So how exactly do you maintain those massive psychological valuations? Well, the creator asserts that you have to constantly sell an incredibly ambitious version of the future. The source meticulously tracks years of what it claims are unfulfilled promises. Let's look at the timeline. In 2013, the Hyperloop was proposed to revolutionize travel, but by 2023, the project was wound up without a successful product. In 2014, a human mission to Mars was promised within 10 to 12 years. In 2015, fully autonomous self-driving was supposedly just 3 years away. And in 2019, the claim was that we'd have 1 million robotaxis on the road by the following year. The analysis emphasizes that, even though these deadlines came and went without the promised sci-fi results, the market valuations just kept skyrocketing.
And this skepticism is actually shared by some pretty notable financial figures. The source material features this really stinging quote from Steve Eisman. You might know him as the famous investor who predicted the 2008 economic crash. He was famously portrayed in The Big Short. Reacting to the SpaceX IPO, he flat out states, "This is an IPO of a sci-fi story, tailor-made for a sci-fi cult, to infinity and beyond, or in this case, to Mars." The analysis uses Eisman's perspective to really underscore its argument that these valuations are fundamentally detached from traditional business realities. Section 3, the buy, borrow, die strategy. Okay, so you might be wondering, if all this wealth is tied up in paper, how do the ultra-rich actually afford their lavish lifestyles? The source outlines a very specific 3-step financial maneuver. Step 1 is buy and hold. You keep your wealth locked in company shares. You never sell, which means you never trigger a taxable event like income or capital gains tax. Step 2 is borrow. You basically mortgage those shares to banks in exchange for massive, low-interest cash loans, and then you just live off the borrowed cash. Step 3 is die. Under current U.S. tax rules, when you pass those shares down to your children, the inherited wealth entirely escapes the capital gains tax it would have otherwise faced. The banks get repaid eventually, and the wealth continues to grow largely untaxed. It's wild. And the source gives us a staggering real-world example of this borrow step in action: $12.5 billion. When Elon Musk bought Twitter back in 2022, the analysis claims he didn't just sell shares and pay income tax on that cash like you or I would. Instead, he mortgaged $62.5 billion worth of his Tesla shares to secure a $12.5 billion cash loan from the banks. He got the exact cash he needed, retained all of his shares, and completely bypassed standard income tax on that absolutely massive sum. Which brings us right to the creator's central frustration. Think about your own paycheck for a second. The average American working-class taxpayer loses about 20 to 30% of their income to taxes. Yet, the analysis highlights that between 2014 and 2018, Musk's wealth increased by nearly $14 billion, but he reportedly paid only $455 million in taxes. That calculates to an effective tax rate of just 3.2%. When you put that microscopic fraction up against the tax paid by everyday citizens, you can really start to see why the source argues that the entire system is fundamentally skewed. Section 4, political ties and valuations. Now we're moving into what is probably the most heavily charged argument in the source material, the claim that this trillion-dollar milestone was the direct result of political lobbying. As an explainer, our goal is just to look at how the creator connects these dots. So the source notes that ahead of the 2024 elections, Musk was a primary donor to Donald Trump's campaign, reportedly contributing $290 million. The analysis then correlates this with subsequent global events. For instance, by February 2025, a high-profile meeting with India's Prime Minister Modi allegedly resulted in removed security hurdles and rapid licensing for Starlink in India. Furthermore, the source claims that Musk's company saw over 40 pending investigations suddenly dropped once the new U.S. administration took over, suggesting his paper wealth is now deeply, inextricably intertwined with these political shifts. But the most explosive claim centers around something called the fast entry rule. The creator explains that normally, an IPO requires months, sometimes even years of waiting before being listed on major indices like the NASDAQ 100. This is specifically designed to protect everyday pension funds from extreme market volatility. But a brand new fast entry rule was introduced with just a 15-day waiting period. The creator argues this essentially meant that millions of Americans' retirement and pension funds were automatically poured into SpaceX, regardless of whether the individual investors actually wanted to take on that risk or not. And the analysis actually goes one step further. It points out that literally just 2 days before this historic IPO, the Securities and Exchange Commission issued a letter waiving a critical safety rule. Usually, brokers are required by law to keep customer money in a separate, safe account, so it's protected just in case the broker goes bankrupt. The source asserts that waiving this specific rule for the SpaceX IPO put $70 billion of everyday stock market investors' money directly in danger. And all of this, in the creator's view, was done simply to ensure this trillion-dollar valuation could actually be achieved. Section 5. The cost to society. To wrap things up, the creator zooms out to present a pretty stark contrast. Bringing in data from the United Nations World Food Program, it's estimated that it would take roughly $40 billion per year to completely eliminate world hunger.
Against the net worth of over $1 trillion, the analysis points out that it would take merely a tiny fraction, literally just 1/5 of Musk's pre-trillion wealth, to achieve this massive global milestone. The source even mentions a historical challenge where the UN provided Musk a direct roadmap for how just $6.6 billion could save 42 million people from starvation, a proposal which reportedly went unanswered. For the creator, this really underscores a massive point about our society's misplaced priorities.
And that brings us to the end of our explainer today. The creator of this deep dive leaves us with a highly provocative thought. If the greatest fortunes of our time are built on shifting paper valuations, sci-fi promises, tax avoidance, and alleged political favors, who is really bearing the ultimate risk here? I hope this structured breakdown helped you navigate the intricate arguments presented in the source material. It is definitely a fascinating look at the very mechanics of modern extreme wealth. Keep questioning, keep learning, and I'll catch you in the next explainer.